I'm Emily Cheng in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, volatility roils the markets. A sell-off in the U.S. as concerns mount over record new cases of COVID-19. And add to that, political uncertainty as 2 Senate seats in Georgia hang in the balance. We will have the latest, plus the U.K. on lockdown again. Plus, is there a bubble in tech? And what about Bitcoin? We will dig deep into all things crypto for 2021 as Bitcoin soars past $34,000, then pulls back. And a meet at the Google bargaining table. At least 200 Google employees start a union aiming to take on issues from compensation to ethics and challenging the search giant's leadership. We have all the details. All those stories in a moment, but first, U.S. stocks slumping on spikes in cases of the coronavirus and before this week's Georgia Senate runoff. Bloomberg's Preeti Gupta joins me now from New York with more on the first day of trading for 2021. So, Preeti, wrap it up for us.
Well, absolutely, Emily. So you did see a little bit of positive gains in the pre-market, and then everything went south. You really saw the S&P 500, the NASDAQ, end the day in the red. And you can see by about equal margins, but the New York FANG index and the SOX index actually outperforming the major benchmarks. That just tells you that a lot of the pain was in those tech hardware stocks. Some of that read-through was simply from virus risk, this idea that demand for tech hardware with this virus risk isn't going to be as robust as some people thought. Flip up the boards, you'll also see that some of this kind of tech pain was in Chinese ADRs as well, essentially Chinese companies listed in the U.S. And you saw the NASDAQ Golden Dragon Index underperform as well. But if you look under the hood of that index, the major worst performers were these major e-commerce companies. So Pinduoduo was the biggest laggard. And then you also saw JD and Alibaba shares decline as well. This idea that the New York Stock Exchange delisted 3 major telecom companies from China that were associated or said to be associated with the Chinese military. So some fears on that front. Flip up the boards one more time. And you also can see that big tech, once again, like I mentioned, was outperforming the New York FANG index, I should say, pulling back, but not as much as the NASDAQ. So once again, the pain in those tech hardware stocks. And last flip of the board, you really need to look at what's going on with the Amazon stock. Some news coming out of Amazon, that partnership with Berkshire Hathaway and JP Morgan on that healthcare venture now paused and potentially not coming back. You saw those shares take a little bit of a hit as well, Emily.
All right, Preeti, thanks so much for that roundup. We will keep watching, of course. Thank you. All right, we are learning more about what led up to that hour-long phone call with President Trump pressuring Georgia election officials to turn the November election his way. Here's part of that conversation.
So, look, all I want to do is this. I just want to find 11,780 votes, which is one more than we have, because we won the state.
Now, on Tuesday, tomorrow, Georgia holds perhaps the most consequential Senate runoff election in history. My colleague, Bloomberg's Emily Wilkins, joins us now from Atlanta with the latest. So first of all, let's talk about the runoff. Emily, where do things stand in the midst of this controversy between the president and Georgia's Secretary of State?
Well, this is a huge runoff that has really ignited Georgia. Remember, it's not just one Senate seat. It's not just 2 Senate seats. This is for control of the Senate, whether Republicans or Democrats will control the body for the next 2 years. And so it's been a huge thing in Georgia. They've been flooded with ads. We've seen the big guns come out. Biden has just had his rally behind me. Trump will have one later tonight. And Georgia is ready to vote tomorrow, except for the 3 million Georgians who have already done early voting and absentee voting.
All right. Control of the Senate hangs in the balance, Emily. But what about this call from the president to Georgia's Secretary of State? How is that factoring in?
So immediately Democrats picked up on the call. Vice President-elect Kamala Harris yesterday in a rally in Savannah said that it was an abuse of power. A Democratic candidate, John Ossoff, said that it was an attack on democracy. But even Republicans, David Perdue came out and said that he was shocked by the call. Now, what impact this is actually going to have on voters does remain to be seen. I've spoken with a lot of Republican voters here in Georgia, and a lot of them do believe that there was fraud in the November 3rd election. Despite the fact that we don't really have any evidence and lawsuits brought before the court on that matter have been dismissed or debunked. But there's a chance if people in Georgia think that Trump was doing the right thing here, he might not see, or rather Republicans might not see, a great loss of votes tomorrow.
Now, the election is Tuesday. The ratification of the Electoral College in the presidential election is Wednesday. What are the chances that Republicans, and let's be clear, only some Republicans are challenging these Electoral College results, but what are the chances Republicans are successful in overturning that?
It's almost next to impossible that they're going to be successful in this process. They will delay it. They will stretch it out. We will see sort of a longer than normal process occur for Congress to certify the Electoral College votes. But in the end, there isn't enough power to overturn the results of any state election. And so we do expect Joe Biden to become the next president on January 20th. But this movement, it does speak to the number of Republicans who still feel, even as he's on his way out the door, they feel loyal to Trump. They want to back the president, and they want to sort of show that they're doing what they can to support the president's claims, the unproven claims that this election was fraudulent.
Now, there seem to be remaining concerns about what President Trump will do in his last days in office. What are your sources on the Biden team telling you about how the transition is going and their level of anxiety about that?
We've seen a number of things. We have seen Trump go ahead and come out and pardon a number of individuals, some that were involved with the case regarding Russia trying to interfere with U.S. elections. Some of those weren't really surprising pardons, but Trump has indicated that there might be more on the way. There are also difficulties that seem to be emerging between the Biden transition teams and current Trump administration officials. Usually, the outgoing and incoming presidents would work together, transferring information, intelligence, making sure that the next president can hit the ground running. But Biden has said that not all Trump administration departments have been cooperative, that some of them have been withholding meetings as well as information. And so that could potentially impact how quickly the Biden administration is able to move on their first day.
And as for the actual runoff, what is the runoff show for Tuesday in terms of, look, the count took a really long time after the election in November. Are we expecting the count to extend into days for this particular election, or will we know the results fairly quickly?
I wouldn't recommend staying up late on Tuesday night to find out the results. This is likely going to be taking a couple days. Exactly how long depends on how close the race winds up being. We don't think it's going to take quite as long as the general election. That took about 10 days for it to be called. But we are expecting at least a few days wait, and we expect to see something similar we saw to the general. When the in-person votes are counted, Republicans are expected to have a nice lead. And then as absentee ballots begin to be counted afterwards, Democrats are expected to sort of close that lead, and we'll see who winds up coming in ahead.
Okay, good to know. We won't lose sleep tomorrow night. Thanks so much to Bloomberg's Emily Wilkins on the ground for us in Atlanta. And be sure to tune in to our live coverage of the Georgia Senate runoffs tomorrow night starting 7 p.m. in New York. Coming up, Tesla sets the stage for a new year with multiple efforts to ramp production after closing a remarkable 2020. All the details next. This is Bloomberg. Tesla claimed close to its 500,000 delivery goal for 2020, just 450 vehicles shy of the mark. The electric car maker has been boosting output to meet rising global demand, including expanding efforts in China and new factories in Texas and Germany this year. For more, we are joined by Jay Jacobs, Senior Vice President and Head of Research and Strategy at Global X ETFs. Jay, thanks so much for joining us and Happy New Year. So very close to the mark, but not quite. What does that tell you?
Well, Tesla set ambitious goals to grow substantially in 2020, and by and large, they made it. Frankly, this was really driven by more of the bottom end of their market. It was growing in China. It was growing the Tesla Model 3, which is the most affordable variant of their vehicle. And that shows that their strategy of really expanding into emerging markets and expanding to the affluent masses is really starting to work in this year.
So obviously this is on the back of an incredible year. Tesla just got added to the S&P. They've got these expansion efforts going in China, Texas, and Germany, and clearly the demand is there. What is your outlook on whether Tesla can really meet that demand?
Well, they're going to continue to grow substantially. Consensus forecast for 2021 is about 750,000 vehicles in 2021, so another 50% growth on top of last year's phenomenal numbers. I think the question is, can they continue to scale up production here? There's certainly tons of demand, but they're growing factories in Berlin, they're growing factories in Austin and in Shanghai. That's a huge operational lift. In the past, we've seen that Tesla is not the best at operational scaling. That is one of their big challenges. So this is going to be much more about the supply side of the equation rather than the demand side of the equation for their vehicles.
Shares rallied over 700% in the last year. Do you think there's room to run there? And at what point does that slow down?
Well, we're looking beyond Tesla. So if you look at our lithium and battery technology ETF, we have 40 other holdings beyond Tesla that we think are really going to benefit from this electric vehicle revolution. A lot of companies people haven't heard of, a lot of Chinese battery manufacturers, lithium miners around the world. And if you just look at today as an example to start off, the beginning of the new year, we saw that those were actually the companies that were leading in performance today, not Tesla. So we think what's happening here is, Tesla is really the tip of the spear for the electric vehicle space, but it's really the entire ecosystem that's going to start to rise as people look beyond just Tesla and look to all the companies that really stand to benefit from electric vehicles taking on internal combustion engines.
So what about other electric car companies in general? I mean, Tesla has really risen so far above the rest, but is there a competitor you have your eye on? I mean, is there anyone that could come close to unseating Tesla as the leader in electric cars, let's say in the next 5 years?
In the next 5 years is the perfect way to phrase it, because right now there isn't really a competitor to Tesla. If you compare vehicle to vehicle at their price points, there's no car that really has the same range, the same specs as their cars right now. They have a very strong lead. But you see the major automobile manufacturers coming in. Volkswagen is coming in incredibly aggressively. We know that these companies, unlike Tesla, have an expertise in producing vehicles and have massive reach around the world. So we think they have probably a 3 to 5 year lead. But after that, the gap is going to close as everyone comes into the electric vehicle space in a phenomenal way.
Now, Tesla is pricing its Model Y SUV below the competition. Speaking of competition, and Elon Musk has said it could be their best-selling vehicle ever. What is your outlook on that model in particular?
There's a lot of upside for the Model Y, but that's probably not going to be their best-selling vehicle ever. It's still a relatively expensive vehicle, and especially in emerging markets, you just don't see emerging markets and Europe, you just don't see kind of small SUVs really taking that much market share. They're much more interested in the small mass market vehicles. So I think the biggest differentiator for Tesla is, can they get to that $30,000 level? If they can, they're no longer competing with BMW, they're competing with Toyota, and that completely changes the game for how many cars they can sell in a given year. And the valuations on Tesla have very little to do with the profit margins on the cars they're selling today. It has everything to do with the technology and the potential for a subscription-based service going forward in those cars. So really it is important to maintain those high valuations, to not be selling in the hundreds of thousands of vehicles, but in the millions of vehicles each year.
Now, over the years, Musk has said he has wanted to take Tesla private again in order to focus on innovation. He's now saying it's basically impossible to take the company private, though Starlink, SpaceX's budding internet business, could be a good candidate for an IPO at some point. I mean, how do you think Tesla, and what is your outlook on Tesla's ability to continue to innovate under the pressure to meet now, such extreme global demand, given that there aren't other automakers there to meet that demand, at least right now?
Well, I think technology is going to take, technology happens at a very rapid pace right now. So Tesla's been at the tip of the spear of the electric vehicle revolution, but you see a lot of other companies coming into the space now. I mean, purely if you look at Blue Origin from Amazon, you have people competing in this space race. You have other people coming in the communications and satellite space as well. So we think this is going to foster more competition. But frankly, more competition is going to lead to probably greater advancements in technology overall going forward. So we think this is probably a really exciting time, not just for Tesla, but for the broader space when we look at electric vehicles, space travel, and satellite communications.
So what are your other best tech picks for 2021? What are you watching?
Well, the space we're looking at right now is telemedicine. This is technology that we're leveraging right now. We're using video conferencing to be able to communicate, but rather than you and me communicating, maybe I'd be speaking to a doctor or a health professional. We've seen the challenges of the reopening economy right now. We've seen how much it's strained healthcare systems. We've seen how much people are still worried about going outside and interacting with people in person. This has caused the spark to really have telemedicine start to advance in 2021. We saw a lot of it early adoption in 2020, but we think this is going to be the year where telemedicine really sticks and healthcare providers really start to proactively reach out to patients and try to convert them into doing medicine remotely as much as possible, not only for their own safety, but also to reduce costs of healthcare administration.
Well, there's been talk that we're in a tech bubble, and I wonder, do you think that tech will continue to be a safe haven like it was most of last year?
I think a lot of the names that were critical to making 2020 as good as it could be, considering the circumstances, are very well positioned going forward. So in particular, cloud computing companies were really the technology heroes of 2020. Those companies, I think, are really well positioned for 2021. We saw, the world lost it today when the Slack outage happened. People could not handle Slack being down for a couple of hours. It shows how critical these companies have become to our day-to-day lives. This means even after the pandemic is over, even if we're back in our offices, we're back commuting, seeing people in person, that these technologies are going to be absolutely integral to our everyday lives going forward. So that's not going anywhere any soon. And these companies have demonstrated that they not only can stay in our lives, but they're also going to have a lot of pricing power going forward to increase prices in the new year.
All right, I was one of those people frustrated I couldn't get onto my Slack for the elementary school to restart remote learning for 2021. Jay Jacobs of Global X ETF, thank you as always for weighing in. We'll be watching out for your picks. Okay, still ahead, more concerns about COVID as the surge continues. New York Governor Andrew Cuomo confirming its first case of the UK COVID-19 variant. We're going to have the latest on that next. This is Bloomberg. New York State has found its first case of the UK variant of the coronavirus, according to Governor Andrew Cuomo. A man in his 60s who lives in Saratoga County in upstate New York tested positive for the new strain. The man hadn't traveled recently, which suggests it's the result of community spread. Let's get the latest with Bloomberg's Michelle Cortez. So, Michelle, obviously this is concerning. How concerning is it?
This is just additional evidence that the new variant is going to be across the United States at this point. We now have a handful of cases in California, moving east across the country. We're in Colorado, we're in Florida, we're in New York. None of these cases were directly connected to anybody who had been in the UK, and they're not connected to each other. So what that means is that really probably a significant number of people across the United States already have this variant. It is here. The question is, how quickly is it going to move, and how quickly will that accelerated pace start hitting our hospitals even harder than they're already being hit?
So tell us what we know about the new variant. Is it more contagious, and how much more contagious? How effective will vaccines that have already and are already being distributed be against this particular variant?
Well, those are great questions. At the moment, we understand that the vaccines that we currently have will still be effective against this new variant. Of course, the issue isn't just that, however. We're seeing reports that it's up to 70% faster moving than the original wild type coronavirus. The problem is that even at a lower rate than that, there's an exponential ratio that happens here, right? As you start getting more people infected with this faster moving variant, then they'll infect more people, and they'll infect more people, and they'll infect more people, each one at that faster rate. So you're just going to see an exponentially higher spread. Not only that, we're already at a very high rate of infection in the United States, and many hospitals were already overwhelmed. We're already hearing reports in Los Angeles, for example, that they're telling their ambulance services not to use too much oxygen for the folks who are in the ambulances because they might not have enough to take care of everybody. So it's those kind of terrifying risks that are coming to the fore. And of course, the vaccines, at some point, they appear effective. They'll slow the trajectory of the disease, but it's this terrible race. What's going to get to you first, the virus or the vaccine? And boy, we're all really pulling for the vaccine at this point.
That is certainly a terrifying picture that you have just painted, Michelle. Meantime, the UK is on national lockdown. Again, we're seeing fresh outbreaks in parts of Asia that were calm for the last few months. Tell us more about the global picture. And you know, presumably this variant is everywhere, right?
Yes, that's exactly it. We're seeing in Hong Kong where things had been under pretty good control. They're pulling back. Their schools are closing back down again. As you say, in the UK and in Scotland, they're going into full lockdown. They're going into stay-at-home mode, right, where not only no schools, no barbershops, no gyms, no gathering in any kind of substantial way. Even outdoors, only 2 people from different families are allowed to be gathered together because, of course, this variant first emerged there. We first learned about it there. They're already close to the breaking point, and so they're taking really dramatic action. That's going to last until the middle of February, so 6 weeks of this really tough lockdown. We've seen in the past that these lockdowns do work, right? That is how this virus got under control in Asia, in places like China. But of course, in that environment, they're able to shut everything down and say no one goes anywhere. In countries like the United States and in the United Kingdom, people have more personal responsibility and personal choice. We've seen less adherence to these rules and these approaches that really do control the virus. And it's now getting to that point where we are close. We're seeing the light at the end of the tunnel. But if you don't protect yourself now, with even more of the virus out there and what's there spreading more quickly, the most dangerous time of this outbreak is right this minute.
Goodness, Michelle, thank you so much for laying out the big picture for us and reminding us why we all need to be vigilant and listen to what our public health authorities are telling us. Bloomberg's Michelle Cortez, appreciate the update. All right, coming up, China steps up its scrutiny of tech behemoths. What is next for the country's big tech players and most famous entrepreneur, Jack Ma? We'll talk about that next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. The New York Stock Exchange says it will delist 3 Chinese companies to comply with President Trump's executive order, which bars American investments in China-based firms that are affiliated with the military. This as China cracks down on its own tech giants, including an antitrust probe into Alibaba and tightened regulations in the fintech space, which scuttled Ant Financial's $35 billion IPO plan. Joining us now to discuss, Howard Yu, Lego Professor of Management and Innovation at the International Institute for Management Development. Howard, thank you so much for joining us. So first of all, what do you make of China's seemingly sudden crackdown on its own tech giants that it worked for so many years to build up and protect?
I mean, the big phenomenon here is all of a sudden we start to see Chinese regulator begins to clamp down all these tech giants. Historically, people seen them as national champion. They pioneer new business model. They have great technologies, is really pride of the country. What we're seeing now is regulator wakes up all of a sudden and discover these tech giants are becoming so big. They are creating this systemic risk to the financial sector or to the industry environment in general, that they begins to put up regulation, trying to rein in the power. And just like anything in China, the development in terms of speed and magnitude is enormous. And we're seeing this wave of regulation coming in now.
So how does the Chinese government then walk this tightrope or manage this balancing act whereby they're cracking down on their own companies but wanting to show and tell the world that China is still a good place to do business?
This is really fascinating, right? Because in a way, China is facing this transition from the sort of traditional manufacturing economy into much more of a knowledge-based, R&D, research development intensive economy. This is the ambition. And in many ways, this tech giant does represent that dream. But fundamentally, if you're looking at these tech companies, whether it's Alibaba or Tencent or JD.com, and companies that are hot on NASDAQ, what you're seeing is in terms of the international revenue, they're tiny in comparison to domestic revenue. So here's the thing. What we have seen in the past, not just China, but Japan and South Korea, these countries, when they try to develop the industrial base, they encourage these companies to go abroad. And somehow, if you judge by that yardstick, these tech giants in China, in fact, have failed or disappointed the Beijing government in terms of revenue abroad international businesses. So I think there is this combination between disappointment as well as systemic risk that these regulators are now given a green light to step up and rein in these tech companies.
Now, we have to talk about what's happening with Jack Ma, who hasn't appeared in public for the last several weeks. He didn't appear at the taping of his own television show. He's basically vanished from public view since the cancellation of Ant's IPO, which coincided with a speech he gave being quite critical of the lack of economic reform in China. What do you make of this, given that he is perhaps the most famous entrepreneur and tech figure coming out of China?
Well, in China, we have this old saying, proverb that friends of mine would tell me, when the tree getting too big, it attracts wind. And certainly Jack Ma, by his behavior, is definitely an outlier. He's extremely charismatic. An employee really take on his mission in driving growth for the organization. And I think what will happen, time will tell whether this incident is going to send a deep seismic shift in terms of the entrepreneurial activity in China. But no doubt what this is a signaling that in China, there's nothing is too big to fail. And if organizations, their agenda are not aligned with the national agenda, then their competitive advantage would get eroded right away. I mean, the sort of phenomena we're seeing, there's a mirror in Europe or in US as well, that regulators are stepping up. But for sure, in China, the development we see of a magnitude we don't see elsewhere.
It is absolutely fascinating. What do you think the impact of all of this will be on Ant Financial itself? It was supposed to be one of the biggest IPOs ever. Will that IPO happen? Will this impact the future of Alibaba?
Yeah, so at IMD Business School, we always track the development of financial sector. How does fintech disruption is going to change the way people bank and how does businesses work? And if you take on the Alibaba playbook at the very core is this idea of taking data advantage. The fact that they can expand so quickly across all these fintech related sector is not just because their bankers are more smarter than others. In fact, everything is on algorithm. But everything is done based on data. They have your purchase behavior, they have your online search behavior, all these aggregate to give them a competitive, unparalleled advantage. What we're seeing is society in China, regulators are not happy about that advantage. In the US or Western Europe, it's about the likability of this tech company sinking so low, people having an adverse reaction. So I think the implication for fintech is for innovation to take hold going forward, not only that innovation needs to be great, the product needs to be great, but the organization in Western Europe would be the likability is high. In China, perhaps it needs to be completely comply with the regulator in terms of rules of the game. So I think executive needs to think broader in terms of the regulatory regime as well as the reputation of their organization.
So what happens to China-U.S. relations after Joe Biden takes office, given that Clearly, the delisting of some of these Chinese companies in the United States is tied to an executive order from President Trump. Does Biden continue this more aggressive policy, or does he pull back?
Well, I think whether it's tech war or economic rivalry is simply going to get intensified going forward. Because if you're thinking about these tech companies in China, if they were to survive, the only way is to grow internationally, to bring in foreign monies back to China as a way to demonstrate their value add to the government. If that's the case, which means that the international competition, whether it's in the Middle East, Southeast Asia, or Latin America, these would be the frontier market. US firms as well as Chinese company would compete even more intensely going forward. So I think the battle for global market leadership simply would get intensified as an ongoing backdrop for the new administration.
All right, something that will be a huge topic of our coverage through the year. IMD professor Howard Yu, thank you so much for sharing your insights with us. All right, coming up, Bitcoin bubble popped? We'll take a look at the famously volatile cryptocurrencies pullback after a spectacular New Year rally. This is Bloomberg. Bitcoin pulled back after a spectacular rally today. The world's largest cryptocurrency falling as much as 17%, the most since March. Bitcoin is up, though, more than 300% in the last year. Over the weekend, it went over $34,000 for the first time. Bitcoin supporters arguing that it's moving in on gold as a hedge against the U.S. dollar's weakness and the risk of inflation. Joining us to discuss, Sunny Singh of BitPay. Sunny, good to have you back in the new year. So look, you got past 34,000, but why the pullback, closing today just over 31?
Yeah, happy holidays, Emily. Hopefully Santa Claus gave you some Bitcoin for Christmas. But I think, today was just a minor blip in the road, I would say. It was more, I think it was just a trading position that got liquidated, they said, in the futures. So I don't think this is long-term fundamentals at all. I think what you're seeing over the last month is, there's a supply and demand. There's a lot of institutional buyers out there, and there's very little supply. It's amazing what's happening now because of those reasons you just said. It's become the popular institutional trade against the dollar, inflation hedge, or gold 2.0. In that case, if people are buying $200, $300 million orders, there's no supply for that. We've never seen those type of buying volumes before, so it's very interesting to see how this will turn out.
So look, I think I know your answer to this next question, but I'm going to ask it anyway. Is there a chance the Bitcoin bubble just popped?
Yeah, so I think, listen, a lot of the institutional buyers bought in around 20,000. So that would be my floor for how far Bitcoin could go down, because it can go down obviously at any point in time. And all those buyers that bought in, they said, oh, we're into Bitcoin now for a 3 to 5 year time horizon, which is great. But I think if Bitcoin hits $45,000 next month or so, they're going to say, wow, we just made 2x. We don't need that 3 year horizon anymore. Let's start selling some. And then you start seeing a selling pressure of $200 million sell orders come in, which the industry's never seen before. That could cause a catapulting event to cause things to go going down pretty quickly. And you could see it go down from 45 to 40 to 35 down to 30 or things like that. But I think the floor would be 20.
So hang on. Are you saying you think it can go to 45 in the next month?
Yeah, so listen, on last month on this show, I said it would hit 30,000 in the next 3 months, and I was proven wrong very fast. It hit 30,000 in 20 days. So I think now there's very little sell side pressure, to be honest with you, and I think it goes up to 40, 45, the next month or so pretty easily, I think. And then when you get to 40, 45, you'll start seeing some selling pressure. But I think when it gets that high now, you're going to start seeing something else come into play, which is that Bitcoin, and I'm going to predict this in this year, will become $1 trillion currency. So that magic number is $54 roughly, and then it becomes $1 trillion currency, which means then at that time, you could even see governments and treasury departments start buying Bitcoin, which may sound far-fetched, but 2 years ago, corporations buying Bitcoin for the balance sheet was crazy too.
Okay, but before that point, does the government step in with more potentially aggressive regulation?
Yep. So the government's already trying to do a lot of regulations. They're passing a lot of KYC and AML policies on the exchanges and all that. but that really won't slow growth. That more slows it around utility of sending Bitcoin to your friends, spending Bitcoin at merchants, things like that. But the actual mass institutional buying and selling, regulations only help that. It makes it more easier for them and more safer and legal in their mind. So it won't hurt the exchanges too much for that part.
How much does the Coinbase IPO, they've filed to go public, how much do you think a successful IPO of Coinbase could change the game and go towards legitimizing cryptocurrency in general?
Well, and that I think it's going to help a lot, and that's why I predict that Bitcoin I thought would be 30,000 because of the Coinbase IPO, but we've already passed that, so I think it's going to hit 45, and then maybe go to $1 trillion market cap because of that. The Coinbase market cap is going to be very instrumental for a lot of reasons. I mean, Wall Street loved that Square traded $1.6 billion worth of crypto in Q3 last year. Coinbase traded $1.5 billion 2 days ago on a Saturday. They've been trading over $1 billion just at Bitcoin alone every day for the last 2 weeks, right? And they charge between 0.5 and 2%. So unlike Robinhood that sells Tesla stock maybe for free for the buyers, they're charging 0.5 and 2%. The revenue numbers that Coinbase is going to have, I think, are going to blow people's minds away. And then Wall Street is going to really drive that stock price up. And then what is all the other trading exchanges like Charles Schwab, E-Trade, all they're going to do is sit back and let Coinbase have its whole market. It's going to put a lot of media frenzy around this whole industry. And seeing when people start showing that much revenue and growth, everyone's going to start offering these type of services pretty soon.
Meantime, Ripple has been sued by the SEC. Coinbase has actually halted trades of XRP, and the government seems to be concerned about what XRP really is. Ripple saying it's a currency. The SEC seems to think it's a security. Not a good look for Ripple executives, or certainly a big headache. What do you make of this?
Yeah, it's definitely going to be a headache for Ripple a little bit. And full disclosure, BitPay is a partner of Ripple, so we know them very well. But SEC's been going after a lot of these companies and getting settlements out of all of them. So we'll see if they want to do a long, drawn-out court case or do a quick settlement. We'll see. What is interesting is that the SEC, with the new presidential administration now, the SEC is going to have new executives coming in right now. So will these new executives that take over the SEC really want to do a long, drawn-out court case with Ripple, or they might not care and want to do a quick settlement, which in which case would be a lot easier for the whole industry, including Ripple itself.
Interesting. All right. Well, Sonny, always appreciate your predictions. I'm going to hold you to that one, and we're going to check in about that $45,000 mark. Sonny Singh of Bitcoin, good to have you back on the show. Now, to another top story of the day, the joint healthcare venture between Amazon, JP Morgan, and Berkshire Hathaway is shutting down next month. A spokeswoman for the venture, called Haven, says it made good progress exploring a wide range of healthcare solutions. The three companies will continue to collaborate informally. For more, I want to bring in Bloomberg Tech's Matt Day. So, Matt, sure, maybe they made progress, but obviously not enough. What do you make of this fast and furious shutdown?
Well, it's definitely not what folks would have expected, on seeing a news release, saying that Jamie Dimon and Warren Buffett and Jeff Bezos were getting together to, revolutionize healthcare. Not their words, but that was certainly the market reaction at the time. I think this is definitely, not what folks would have assumed if you look at those three CEOs and those three companies getting together to try to lower healthcare costs. They don't have a ton to show for it here 3 years later.
What did Haven actually accomplish in this time?
So Haven says that they, piloted a bunch of experiments. A lot of stuff didn't make it outside of its walls. They say it's going to inform future work at the companies. The most prominent thing they did actually get across the finish line was some experimental benefit plans, kind of shifting the cost equation, or at least trying to make it more transparent for employees what they were paying or what different medical procedures were going to cost. Those were rolled out at all three companies, not on a super widespread basis, but enough that they were actually putting some alternative insurance schemes into the world.
Meantime, Amazon has independently continued to move in on the online prescription market. What does this say about their, general ambitions in the healthcare space? Are there more limitations ahead?
It certainly highlights challenge that companies like Amazon, face, and anybody in tech who says, hey, we're going to go, figure out a new way to deliver healthcare or make it cheaper in the U.S. Certainly, though, Amazon's ambitions have grown since they launched this venture. Since then, to your point, they've launched online pharmacy. They've started telehealth services for their employees in Washington State. Amazon is taking a bite at this from several different angles, and for whatever reason, this JV was no longer part of their future plans.
So, and Matt, do you know how much the pandemic had to do with this? I mean, did the pandemic potentially accelerate the failure of this venture? I mean, obviously, we're at a hugely critical moment in healthcare, and yet this, very ambitious healthcare organization couldn't make it work.
Yeah, it very well may have. The CEO, Atul Gawande, when he stepped down to focus more on writing and some of his other health ventures, he said at the time, part of the reason was he wanted to focus on this COVID response, that it was such a generational challenge. I think that very well may have played a role in his personal decision. I think you've also seen a little bit of loss of champions of this project, at Berkshire Hathaway, at JP Morgan, the folks who were pulling the strings behind the scenes are really pushing for this to come together. They wound up doing other things as the crisis created other priorities in the last couple of years, and they had some job changes.
All right, Matt, thank you so much for weighing in. We'll be following, of course, Amazon's continued efforts in the pharmacy business, but interesting development today. Okay, still ahead, tensions coming to a head at Alphabet with the creation of a union, a rarity in Silicon Valley after years of unrest among Google staffers. We'll discuss next. This is Bloomberg. Netflix's effort to lure producer Shonda Rhimes from Disney to the streaming giant is paying off big time. Rhimes' period piece, Bridgerton, is on pace to be Netflix's 5th biggest debut ever, with 63 million households watching in the first 4 weeks. It is #1 in 76 countries, including the United States, and reached the top 10 in every other country other than Japan. Netflix committed more than $100 million to persuade Rhimes, the creator of Scandal and Grey's Anatomy, to join the company. I'm about 1.5 episodes in, and it's pretty good. All right, employees of Google and its parent Alphabet announcing the creation of a union, escalating years of confrontation between workers and management at the search giant. The effort, called the Alphabet Workers Union, is a rare campaign within a major U.S. tech company. For more, I want to bring in Bloomberg's Josh Idelson. So, Josh, you don't see unions at tech companies. This is certainly a big deal. What is your take on this?
Well, this really opens a new chapter in activism that's been roiling Google for several years now. We've seen workers protesting over research ethics issues, over collaboration with the Pentagon, over the handling of sexual harassment, over the treatment of contract workers. We even saw thousands of Google workers stage a walkout that forced a change in the company's forced arbitration policy. And now some of the workers who've been involved in taking on those issues at Google say they want something that is a more resilient institution to extend that work and carry it forward, to bring more resources to bear, including paid staff, to have a structure that includes elected leaders that they believe will amplify their voice in trying to change the direction of the company and take on what they see as matters of conscience as well as compensation issues. This is not something that...
We got this statement, Josh, from Google. Kara Silverstein, the director of people operations, saying, "We've always worked hard to create a supportive and rewarding workplace for our workforce. Of course, our employees have protected labor rights that we support, but as we've always done, we will continue engaging directly with all of our employees." As I understand it, this is started with about 200 employees. Are you expecting that to get significantly bigger?
We're going to know more in the weeks ahead. The workers involved, one of them told me that they expect now that this effort is public, after having taken place in private for months, that there will be a flood of interest from other people. But at any company in the United States that is not union, there are concerns people have about getting involved in a union or any other kind of labor organization that's seen as independent of the company and as a threat to the discretion of the company. Those couple hundred people we will know a great deal a month from now from whether they turn out to be just the beginning of many more rushing to join or not. This is an organization that right now says it's not seeking collective bargaining or formal recognition from Google or Alphabet management, and that it doesn't necessarily need to have a majority of the workforce signed up behind it in order to affect change at the company. But certainly, as with any kind of organizing, the share of workers that gets involved is going to shape how much impact the workers can make and how seriously the company takes it.
It is certainly a fascinating turn of events, and of course, on the back of that walkout where 20,000 plus Google employees walked out on the company a couple of years ago in protest of how the company was dealing with sexual harassment and other issues. Bloomberg's Josh Idelson, who covers workplace agitation for us. Thank you so much, Josh, for your insights there. We'll continue to follow. That does it for this edition of Bloomberg Technology. Bloomberg Daybreak Asia coming up next. I'm Emily Chang in San Francisco. This is Bloomberg.